Rahm Emanuel once said, "You never let a serious crisis go to waste." Well, we have a crisis and we have a lot of crazy, insane moves being made right now by the US Federal Reserve. Obviously, with the coronavirus raging and expanding, there are major implications with the underbelly of our economy finally being uncovered. And now these are significant moves by the Fed that is offering. This just came in just moments ago. We were just talking about this in the previous video as it broke. The Fed is offering at least $1.5 trillion worth of short term loans to banks today and tomorrow. Major news. And again, as I was saying in the previous videos, this definitely has similar undertones to 2008. Tim Picciott, what's your take on it? And do you have those similar feelings like I do?
Hey, thanks, Luke, and it's Tim Picciott. But anyways, that was close this time. But yeah, as we're wrapping things up with everything that's going on with the economy, so what is going on right now is the Fed is so we've got today, March 12th, 2020. The desk will offer 500 billion in 3-month repo operations at 1:30 p.m. Eastern time. That will settle tomorrow on March 13th, 2020. Tomorrow, the desk will further offer another 500 billion in a 3-month repo operation and 500 billion in a 1-month repo operation for same-day settlement. So that's 1.5 trillion right there. And then they also have a 3-month and 1-month repo operations for 500 billion will be offered on a weekly basis for the remainder of the monthly schedule. That's in addition to 175 billion dollars per day and another $45 billion for 2-week repo loans. And this is something that we have been calling out the entire time as this has been going on. One thing a lot of people don't know is that because you can only listen to somebody what their prognostications are going forward if you know what their track record has been going back in the past. And I had a presentation called The Trump Effect and Why Good News is Bad News. Made it January 2017. And the entire thesis of this was, listen, Trump relative to Hillary would have a lot of things go, very well on the economy. That then positive energy will then, create this own self-fulfilling prophecy where people think things are going good just because we've been told things are going good. That then will then give the Fed to lose their excuse not to keep rates low anymore. And then the Fed would eventually have to raise rates. And then those raising of the rates would then pop the stock market bubble. That's exactly what we saw that happened in December of 2018. The Fed came in and with their bazooka then, and they decided to cut interest rates. They decided to not sell $50 billion of bonds a month. And now not only they're not selling $50 billion of bonds a month, they are having to issue over $1.5 trillion. That's just going to be the next 3 days, Luke. And then that's on top of the other $175 billion loans that they're doing every day, on top of $45 billion for every 2 weeks that are doing. So this is actually worse than 2008. They are actually stimulating the economy more through quantitative easing than they were even back then, except the problem this time, though, is they're not admitting that they're doing it. And if things are going great, then why are we having to do this? We're having to do this because the entire economy is being propped up on debt. And it's all this cheap money that then fueled all these bad decisions. And right now, we're going to have socialism for all these, big companies, like the big oil stocks have gotten absolutely hammered because those companies are going to have troubles paying their debts. Because what happened is that those, particularly the shale oil companies, can only be profitable when oil is at 60, 70, 80, 90, all the way up to $120 a barrel. So the problem with those companies is that pretty soon that every single oil they extract out of the ground, they're doing so at a loss. And so it's just compounding their losses. So it's sort of like, maybe our crowd is probably more in tune with Bitcoin. And I have that pulled up on screen right now. And so with Bitcoin, it's trading.
Yeah. Before we get into that, because I remember just a few weeks ago, you were saying you were asked about if the markets crash, will Bitcoin go up? You said no. You were pretty much right on that. But before we get into the whole Bitcoin stuff, which Bitcoin is also down as well, which you'll explain in just a little bit, I just also want to point to the quote financial guru Jim Cramer, who was wrong about Bitcoin. It was wrong about the 2008 financial crisis. The 2008 financial crisis, by the way, was just paid over with more bad debt. That whole problem, huge bubble, popped, inflated, made into a bigger bubble to what we have now. So, of course, a lot of people are looking for financial reckoning, but this is what I wanted to get your opinion on this, because Jim Cramer, who's usually wrong during the big events, is saying that the way to get out of this market crash is for the government to suspend taxes. That sounds pretty good. But to also print their way out of this crisis by printing $500 billion to address everything that's happening here. What do you think of that proposal before we jump into Bitcoin?
Yeah, well, first off, I usually use Jim Cramer as a contrarian indicator, so I listen to him to see basically what to do the opposite of. However, I do really like the fact that maybe I'm digging myself some Jim Cramer if he wants to suspend taxes for the rest of the year. I mean, I'm all about that one. And so I remember going back to when I first had revealed my investment strategy on video was October 3rd, 2018. And I remember Jim Cramer at that point saying, it's at the time, Trump was criticizing Jerome Powell for trying to raise rates. Now I criticize Jerome Powell, but it's for completely different reasons. And that's one of the problems I do have with Donald Trump. But I remember back then that Jim Cramer's like, oh, how ridiculous that Trump is going and criticizing Jerome Powell and he doesn't know anything and blah, 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 blah. And meanwhile, at the time, I was ringing the alarm bells. And so for people that would have invested with me then, they basically would have been completely unscathed by what happened late 2018 when the market went down about 19.9%. And then last year, we made about 25%. And this year, we have put options that literally since January 15th have been up. Past performance is no indication of future returns, up close to 500%, Luke. It's just crazy that I'm weathering the storm extremely well. I'm still very small, kind of micro, financial manager out there, compared to all these other big gurus out there. But the performance has been there because I knew what I was mainly trying to protect people against was a big move up or a big move down. And so a big move down is, what we just saw, and we saw last year a gigantic move up. Because my strategy is not going to work in a flat environment. It's not going to work. So it's not like this, just stay there forever, all weather you want to do this. But for right now, it is kicking serious butt. I've got, I can sleep well at night, but I knew that there's only three scenarios. Either, the market finally doesn't care what the Fed does because they realize they've been wrong all along. They've been realizing that when the Fed in 2011 was saying that by 2015, we'd be at 4.5% interest rates by then. I knew that was wrong, and I knew that there was no way that they could ever pull that off. And I actually got an internal email, got flagged by my compliance department at the time for a major broker dealer that I was working for at the time, saying, "Hey, you're not allowed to say that." And so financial advisors are not allowed to actually be giving financial advice because you're not allowed to. You're hamstrung what you're allowed to do, what you're allowed to say. And simple math would tell you there's no way if you have $23 trillion of debt that you could ever have 4 or 5% interest rates, because that $23 trillion doesn't even include Social Security, also doesn't include Medicare, which is a bigger unfunded liability than Social Security. And the point that I wanted to make before on crypto was, and relating this to oil, is right now we're taking a look at Bitcoin. It's at $6,129. Well, imagine if it takes $8,000. I'm just throwing out a hypothetical. This is not true right now. Let's say it takes $8,000 to mine one Bitcoin, but you can only sell for $6,000. Who's going to want to do that? Well, you would do that. There are some reasons why you would do that. So if you are in China and let's say, China, and you're worried about, getting your money out of the country, or you're worried about, hey, the government's going to confiscate all my money, you might be willing to lose some money on that. And so that's why it's hard for everyone to compete in Bitcoin money. Where this analogy goes into oil is, imagine if it costs you, $100 to get it out of the ground and you can only sell for $30, you're going to lose $70, but then they need to get that money to then pay off the bonds. And so as they are getting more and more oil out of the ground, they're losing even more money to then paying off these bonds that they're not going to be able to pay. And that, in my opinion, is going to be one of the major black swans catalysts that could really, trigger everything. So maybe coronavirus isn't that big of a deal. I know we've been covering it. I think it is starting to become a pretty big deal. But now, if this even festers for another, month or two, what's going to happen is a lot of these oil companies could start going under. And I don't even know if the market's really even pricing that in right now, Luke, because we're going back right now, seeing the screen, complete sea of red. The Dow is down 1,800 points. And what's fitting about this is the Fed just said they're gonna print $1.5 trillion, and the market's still down 1,800 points. That is just a complete crazy scenario, because what would happen in the past is the Fed would, acquiesce, and what would happen is then the market would just go soar. So traditionally, I would expect that type of news to have the market go up, especially after like all these massive down days that we've had. I would expect that to have the market just absolutely soar, and that has not happened. So this could be the big catalyst. Either way, my strategy doesn't matter either way, as long as it doesn't end up flat. But anyways, Luke, things are getting crazy, things are heating up, and people need to be prepared. And the other markets that I want to address right now is we've got gold sitting in just underneath $1,600 an ounce. That's at $1,593. Silver is at $16, which are relatively low, low amounts in my opinion. Not investment advice. If you guys do want investment advice, you can see down below and go to my website to find me there. But yeah, lots of craziness, Luke.
Yeah, I mean, lots of craziness, especially in the crypto market. I'm just reading the headlines now. One, Bitcoin is having a very, very bad day. That's one of them. A couple minutes ago, 45 minutes ago to an hour, Bitcoin loses 21% of its value. And just an article just came out 15 minutes ago. Bitcoin plummets nearly 30% in a matter of hours. You, of course, said the market crash, so does Bitcoin. Why did you say that?
Yeah, so when I was on stage at the TDV Investment Summit, which was at Anarchapulco, afterwards there was an all-speaker Q&A, and I had a lot of my heroes up there on stage with me, and somebody asked everyone this question: what would happen to Bitcoin in a financial crisis? And I said, hey, this is not going to be a very popular answer up here, but what I think is going to happen is Bitcoin is a risk asset, and as a risk asset, you get a lot of people who are in Bitcoin who shouldn't be in Bitcoin. You got a lot of people who are there because they think they're going to make $1 bajillion, not because they actually are philosophically involved in this. And so what they're going to do is those same people are the same people that are going to get wiped out probably in the stock market, and then they're going to panic and they want to keep whatever money they have left. And so all it takes is a little bit of panic selling. The volume of Bitcoin, relatively speaking to other markets, is not very big. And if the they, them, those want to bring it down, it does not take a lot of volume to be able to do so. Now, eventually, I did make a caveat on that I thought that in a long enough time horizon, that then the government money printing, again, we're on a long enough time horizon. I'm not saying it's going to happen instantly. Then I am long-term very bullish. Taking a look on the screen right now, we have the Bitcoin Fear and Greed Index, or the Crypto Fear and Greed Index. Not financial advice again, but what we have here is it's sitting at a 14. A 14 indicates extreme fear. 100 would be extreme greed, for instance. And what I've seen, past performance isn't future indication, but every time it's been low, especially like under 20, around 15, 14, it's always been pretty much a good time to buy on a longer term grand scheme of things. So right now I'd be looking at getting in to Bitcoin. I do offer crypto IRAs where people can actually put crypto, hold on to the private key, get it inside their retirement accounts. That is a feature that we do offer people. And right now, when we're in extreme fear, is the time you want to buy. Unfortunately, everybody comes to me for that when they're in the extreme greed phase, but now is the time that you want to do that in the extreme fear phase, and obviously don't put in any more than you're comfortable losing. But I'm actually long-term bullish, but it was because of all those reasons, Luke, that I thought that in the short term that Bitcoin would go down. But the bigger thing that I'm concerned about is that this will then be used to usher in some sort of Fed.gov coin of, hey, the financial powers that be have messed everything up, and now now the only way to quote unquote fix things is to have this digital currency, and then this digital currency will then be combined with some sort of Chinese social credit score, and then we're all going to be, now, obviously not our listeners over here, because we're smart enough and we're giving you guys the information not to accept this mark. But for me, crypto is a double-edged sword. I think all money is eventually going to be digital, so you might as well embrace the good ones, in my opinion, that are private and aren't going to track you, trace you, surveil you. But I don't know the timeline and all this stuff, but I know in a long enough timeline, the goal of the powers that be is to get everything on a digital grid and then tie it up with social credit. And now you've talked out a bit against something that's going on, and now you're cut off. So, this is a very important battle. This is probably the most important battle there is, because this is a battle where if we lose this battle, I mean, the implications for our kids and grandchildren are just tremendous, Luke.
Yeah, I mean, very uncertain times. Tim Picciott. I'm gonna mess up your name. I'm sorry. I'm horrible with names, Tim. I apologize.
Rhymes with vote. Rhymes with vote or goat or boat. So Picciott.
Tim Picciott.
Tim Picciott. Yep, we got it. That's
Tim
good.
Picciott. Thank you so much for doing this show with me, for adding all this valuable information. Hope you guys enjoyed that. If you did, share this video with your friends and family members. We're going to be reporting more here on Change the News channel, independent media provided to you every single day. Stay tuned for more.